Good morning. It's Jonathan Barratt with the week ahead report. The big numbers this week are obviously US CPI and PPI. So the heading for the week ahead report will be US CPI and PPI. PPI is due out on Thursday, and the CPI, all-important CPI, are due in on Friday. But before we get into that number, let's have a quick overview of all the data that we've got out next week. And obviously we'll culminate with a little bit of a chat about the data, particularly out of the US. First of all, what do we have coming out? And just moving ahead, here we are. This is the data which we've got coming out. Now the interesting thing here, a lot of this data came out of China, and it's coming out a little bit earlier. But what we can see here is that their expectations of producer prices and CPI, the market is looking for a bit of an uptick in these numbers. And as you can see here, let's just move that down here, have a little bit of a look. Producer prices are to 4.5%. The prior was 4.8. That seems to be a little bit under control. But one of the scariest points with the CPI and retail sales, consumer price last was 3.3%, and the market's looking for 3.5%. Retail sales also very strong as well, and industrial production IP are steady, perhaps a little bit off there, given the fact that things are just slowing down just a touch in China. So all those data will be pretty important. Obviously, we're still continuing to see growth, particularly out of China. We saw that growth, obviously, with the GDP out of Japan. Obviously, Japan is China's #1 trading partner. So you can see that growth starting to occur in Asia. As a result of that, Australia should fare okay. But very important, those numbers out of China. That will help reiterate what we're feeling in terms of a dual global economy, where Asia seems to be moving quite nicely and Europe and US seem to be slowing down. That'll be reiterated by the Eurozone industrial production. Those sorts of numbers there I think will be very important. That'll give us a bit of a clue as to how Europe is actually faring. Obviously some concerns there we had last week, particularly with Anglo-Irish looking to be liquidated, and we also had a relatively good bond auction, which was quite encouraging out of Portugal, but something to be pretty much careful of. Okay, moving to Tuesday, NAB business confidence in Australia and conference board in China, which will be important. IP in Japan, I think will be quite good. We're actually looking for a little bit of a higher number there at about 0.4. The number prior was 0.3. And we'd like to see that continue. We'd also like to see capacity utilization pick up as well, and basically seeing once again that Asia seems to be moving on and Europe seems to be coming back. Important data obviously out of Europe. There you can see CPI, RPI out of the UK and particularly France, and all those numbers are hopefully going to show that there's a little bit of sign of life there in the economies, and that if we do get a little bit of uptick, an uptick in those sorts of numbers, then we can see the economies are trying to move out of their concerns. Okay, in the States, we've just got advanced retail sales, etc., business inventories, and obviously the API data and ABC consumer confidence there. We certainly want to see a bit of an uptick in those numbers, and that would hopefully give us some reading. Also give us some optimism concerning the data which was expected out on Thursday and Friday. So we'll be staying pretty close to those numbers. If those numbers do show a little bit more of an uptick, particularly business inventories and consumer confidence, then we can see these numbers, the inflation numbers, might be a little bit better than what we expect. But we'll talk about those when we get to it. Okay, in Australia, Wednesday, consumer confidence, it's still quite high, looking quite good there, particularly where the Aussie's trading. Eurozone CPI, once again, we've got to see whether there's signs of life there. We have seen benign inflation for some time, particularly out of Europe, and and this will certainly reiterate what we're seeing there. Would like to see a little bit of life there, but I think perhaps a little bit too optimistic. In the States, we've got import prices, empire manufacturing, IP and capacity utilisation, all very important here. As you can see, expecting a little bit of a contraction in IP, and as you can see there, 1% was the prior, 0.2 is what they're looking for. So that is still an increase, but it's a slow increase. and that reiterates the concerns. So I think this is one reason why we've got Obama actually trying to talk up the economy and using persuasion to create that confidence in the market so that the market can hopefully start to clear profitably. And if it can clear profitably, then more people will hire more people and the job rate should come down a little bit. Okay, so that's all we got there on Wednesday. Thursday, now these are the important ones. Thursday, we've got retail sales in the UK, trade balance in euro, but here we are, producer prices in the States, ticks data as well, and initial jobless claims that we have all the time. But keeping an eye on producer prices, expected to come down, and as you can see, 4.2% the prior, down to 3%. And that, in my mind, and as you can see here, ex-food and energy are also down as well. So the yearly numbers are meant to see a 4. The month-on-month numbers are perhaps a small tick, but ex-food and energy, you can see that there is a drop of 0.2%. So a lot of this has to do, obviously, with what's happening in the energy markets. But overall, you can see that expecting those numbers to be on the downside. I'm a little bit upbeat on this and actually feel that we will see a little bit better signs of price improvement and producer prices. So let's see what happens on that front. Okay, Friday, obviously Eurozone current account and construction will be very important, but obviously the key for us will be the CPI data out of the States. Pretty much unchanged for that sort of data. I would like to see a little bit, as I said, 0.3, 0.4 is something that I'm looking for. Ex-food and energy, probably about a little bit higher than that, 0.15, and we'll probably suggest that that number could be just up a little bit. That's that optimism which we really want to see, that prices and that people are paying just a little bit more for those prices through the economy, because that will allow the markets to clear a little bit better or clear profitably. And as a result of that, we could probably see just a change in rhetoric, a change in confidence, and that'll get that unemployment rate a little bit better. Just having a look at a little bit more data on that. This is the CPI and PPI 12-monthly changes. It's a chart going back to 1985 from Martin Capital. That's something that we look at quite a bit, and it gives us a bit of an idea of what we're actually seeing. And as you can see, the green line here is producer prices. Now, this is that optimism we talk about, but that optimism has come back lately. So we're sort of feeling that it can come back a little bit more, but we don't think it'll come back further than what people expect. We actually think it'll be relatively stayed. Consumer prices is the green. As you can see, that's down as well. That's showing that benign growth, but I'd like to see a little bit of an uptick in that, and probably like to think it's just a little bit better than expected. So let's see how that goes. And the red one, consumer price index, less food and energy. That obviously is the smooth in line, and as I said, I want to see a little bit more price improvement. So at the end of the day, I'm looking for a little bit of price improvement across the board, and with the result that could get interest rates still remaining low, but in my mind the key is really to get that unemployment ticking higher. Unemployment to me is obviously the key, and if I can get that up a little bit, then I know that it's going to be a lot more encouraging for everyone. I'll just get a chart of that too, and this is how you can have a quick look at it. The unemployment rate here off 10, this hopefully a lot of people have seen that it wants to trade back to the top side. I'm actually hoping that it'll start to come lower, because that's where I want to see that profitability start to occur, where the market will clear profitably. But it's still alarmingly high, and I think Obama's story now is all about trying to get jobs growth occurring, because remember, 70% of the US economy is consumer related, so we really need to see that start to boil up in order to get some confidence back in the market. So a slight amount of inflation, I think the Fed would enjoy, because that will show us signs of life within the economy, and that things will ticking on, and it'll also allay those fears of deflation that a lot of people have at the moment. And I think Obama is doing the right thing by actually talking up the economy. Now, whether or not he gets it through Congress is another thing, but the key for me is that he does start to talk up the economy a little bit, so that we can get some more excitement, some more price action occurring at the right end of the spectrum. Because remember, people just want to dip a little bit of hand in their pockets. They don't want to feel themselves like Japan, which has gone through that deflationary period and trying very desperately to get out at the moment, because that's a very hard cycle to break. So the correct rhetoric is to talk the economy up. Obama can do it if he does. That will give us some positive numbers, or better than expected numbers, in terms of inflation. That should placate those concerns of deflation, and we should see perhaps a little bit of pressure on some of the bonds, particularly the long bond as well. But and on the Aussie, on the US dollar, probably see a little bit of strength coming back to that. But let's see how that unfolds. But that's about it from me. Remember, the US CPI and PPI are going to be the key next week for the market, and obviously any rhetoric out of that will help determine what happens with interest rates in the US, and perhaps that matter also around the world. So that's about it from us. If you want to stay close to our calls, remember to look at the Twitter and also Facebook. Twitter comes out with those recommendations when we feel something's on, and we don't do it all the time, but we certainly come out. And obviously the 1300 number, 1300 660 734, or on YouTube as well, which just type in commodity broking, and you get our YouTube channel with a lot of the stuff we talk about. That's about it from me. Have a great time and a good week, and we'll certainly talk to you later.